Happy Monday, traders. Welcome to a fresh week in markets. Okay, we did have some geopolitical tensions rise up again on the weekend. Iran did hit a oil tanker going through the Strait of Hormuz. The US retaliated by hitting some targets along the Strait of Hormuz. And then Iran also retaliated again by hitting some US bases in the Gulf. With respect to the memorandum of understanding and the peace agreement, what the key takeaway is that it is a fragile situation. Will we eventually actually get to long-lasting peace in the Middle East? That's the big question. So, market-wise, obviously, if this does fall apart, we're going to see markets a lot lower, and obviously crude a lot higher. So this is a risk that is still there, and something that the market can't really dismiss or totally ignore. But having said all of this, just before the market opened for trading on Monday, and futures markets open, like clockwork, we got a positive headline. And that was that the US and Iran have agreed to stop bombing each other, and that they would have talks this week to try to iron out their differences. So, where have we got markets opening? So, if this happened while markets were open, obviously crude would be a lot higher. But because we got that positive headline, crude is still sitting around $70 and really hasn't spiked up on the back of those geopolitical tensions. But I've said this before a few times, that selling fresh short crude at these sort of levels, it really doesn't look like the risk reward is there. I mean, crude has come down a long way. And I'd imagine that these sort of levels here, we're probably going to start seeing some good support. And it's also good to bear in mind that the market at the moment has actually got a record short position in crude. So it wouldn't take a lot to get a spike higher. So again, the bias not chasing the market down towards these sort of levels. Okay, so in other markets, US equity markets, S&P and NASDAQ, they actually finished last week pretty much on the lows for the week. So they had quite wide-ranging weeks, but yes, finished on the lows. We have actually started trading positive, up about 1% so far in early market trading. But what we're seeing in US equities at the moment is two-way volatility now. For the last 2 months, we've seen US equities being the strong link in markets and pretty much have gone vertical. Recently, we have seen the market test those record highs in S&P and NASDAQ. They've sort of failed there. And we're seeing them basically trading in now a much bigger, wider range with two-way flows. So at the moment, it's hard to see US equities, breaking that top side and retrending, and also, sort of breaking down aggressively. So I think with US equities at the moment, it's probably, if you are a range trader, that's what I'd be doing. I'd be trading the range and respecting that now that we are getting a bit more of a two-way market in US equities. As far as US bond yields are concerned, they did actually close well off their highs for the week. So US 2-year yields actually closed below 4.1%, around at 409. And 10 years actually below 4.4%. So they, again, well off the highs, a good 10 basis points for both of them. So we'll see how US bond yields continue this week. But they've got US payrolls. It's probably the biggest event risk and data, economic data that we have this week. Those numbers actually are going to come out a day earlier. They're going to come out on Thursday. That is because Friday is going to be a shortened week. It's Independence Day, July the 4th for the US, so markets will be closed on Friday. But in any case, yes, Thursday is probably when we're going to see, some economic data potentially, move and affect markets. As far as the US dollar is concerned, yes, that has been one of the better trades, buying USD. Dollar index is at 52-week highs. We're around about that, just below 101.50 at the moment on DXY. At the moment, with the bond yields actually trending a touch lower, or coming off those elevated highs that we've seen recently, is not helping now the next leg higher for USD. So USD certainly needs those bond yields to go back higher to get the US dollar trending again. So again, take you back to the payrolls number on Thursday. That's going to be all important. So certainly if that is a strong number, we're going to see the yields higher, and obviously US dollar is going to follow that. So potentially we might have some quiet trading going into that payrolls for the US dollar. As far as precious metals are concerned, yes, gold and silver have been absolutely hammered in the last few weeks, but we did see a bit of a bid come in for the gold just below 4,000. The low was around about 39.60, and it closed at 40.80. So I'd imagine, look, at the moment we're probably going to be trading a range of 4,000 to 4,100 in the short term. Again, probably payrolls is the one that's going to give us direction for precious metals, especially once we see what happens to the USD. Bitcoin, that has been the weak link for markets. It's been absolutely struggling. We are opening Monday just below 60,000. The low last week was just above 58,000. So at the moment, it seems as if it's trading, say, a wider range of, say, 58,000 up to 62,000. Definitely big sellers sitting topside. And yes, at any stage, obviously, wouldn't surprise if we do see Bitcoin starting to sell off and break that 58,000, potentially open floodgates for targets down to 50,000 at some stage. Because again, it is the weak link. Lots of headlines about Michael Saylor, who's the biggest, and his company Strategy is the biggest holder of Bitcoin, really struggling. And if at any stage he starts to sell, that is what will definitely open the floodgates. So certainly I'd be a little bit wary about buying any dips in Bitcoin anytime soon. Anyway, good luck to start the week. We're starting off, obviously, just a little bit risk on bullish with US equities leading the way up about 1%. And yes, payrolls is the key data print for this week, but other than that, not a hell of a lot on the agenda. Good luck with your trades. We'll check back with you shortly.